can we, or can you guys describe what a captive is and what purpose it serves? I think that would be a really great umbrella question, maybe to kind of set us up here for the next ones coming down the line.
A captive insurance company is an insurance company a business owner sets up to insure their own business. So our clients, they're buying property, casualty, liability, workers' comp. If they're developers, they probably have builder's risk, but they look at the traditional market and they say, I'm not being served. So, or they've paid out a lot of money in premiums, but their claims are a fraction of what they pay out. So, or they pay in premium. So they say, I'm going to create my own insurance company. They pay those premiums to their own insurance company. And then we get reinsurance on the back end to make sure that if there's anything catastrophic, that they're not, destitute. But it's an insurance company a business owner sets up, or an association is an association of people that all come together to say, we want to do this. Or there's risk retention groups where people come in. I mean, it's just an alternative form of risk management, but this isn't the reason people do it, but there are some significant tax benefits for being an insurance company. I have a lot of books on my shelf, but one of them is by, I'm probably maybe the only one old enough to remember, Andrew Tobias, an author from the late 70s. But he wrote a book called The Invisible Bankers. And it's all about the insurance companies and the regulations that Congress has passed and how they can accumulate money in the form of reserves for claims that could come down the road. We don't have a lot of time to get into it, but it's important to note, and the reason why that's set up is if you think about your business, there's like 6 people here that manufacture product, that just from what I saw. But your business is very simple. The taxation of your business is simple because you take in raw materials, you hire people, you get buildings, you go and manufacture your product, then you sell it. It's income minus expenses, and that's what your taxable income is. But with an insurance company, they take in premium dollars today, but a claim could happen tomorrow, next month, next year, or if it's builders, if it's construction, that could happen 10 years from now. If it's workers' comp, you could get claims that go on for years and years and years. So if they were basically taxed premium in minus their expenses and they paid income taxes on whatever's left over, they would never have enough reserves to pay claims. So that's why Congress passed tax laws that allow insurance companies to accumulate reserves for future claims that could come down the road at any point.
Maybe I can put a bow on it. Howard, I saw that you posed the question. I think it's been, 15 plus years since we connected in person, but in your world, certainly we have a fair amount of clients who are setting up captives to cover, property risks. So we have captives in California that are covering earthquake because they choose to not buy from commercial carriers. They're now putting it in their captive and generating all the benefits that Wes just described. Or they're buying coverage from their commercial brokers with a higher retention and using their captives to cover that initial retention amount if indeed there are ever any losses. So there's a lot of different ways to utilize it, but certainly for larger property owners, it becomes pretty compelling.